Well, welcome back to Banzai's channel with tools for marketers that love data, whether creating webinars, virtual events, or engaging experiences that deliver deep analytics and actionable insights. And joining to give us a high-level overview of the investor deck today, we have Joe, the CEO, joining as always. Welcome back, sir.
Hey, thank you, Kyle.
Always a pleasure to get you on. So I want to pass it off to you to walk us through this and just kind of a high-level overview.
Sure, happy to. Let me just dive right in. I'll go ahead and note that we have all of these disclaimers and summary available in the deck on our website. So if you want to go read that stuff, go do it on our website. I'll start by talking about the customer problem that Banzai addresses, which, Kyle, as you just said, really comes down to the data problem in marketing. So, if I'm a CMO, and by the way, we've talked to probably thousands of CMOs, hundreds of MarTech companies. We talk to these companies every single day. This job is the hardest job and probably the most complex job of any job in the C-suite or of any function in a company. Because, if you're sales, you got a pretty simple job, take leads and go try to close them. If you're a support, take support tickets, go try to service those support tickets. Not to denigrate those functions, they're important and they are challenging and they're skills. But if I'm marketing, think about the number of hats that I'm wearing. I'm dealing with SEO, website, video, webinars, analytics and, web traffic and social and paid search. And just, that's a 5% list of all the things that CMOs are dealing with and the marketing department is dealing with every day. So it's easy to look at this problem and get overwhelmed. But as we've looked at it over, again, thousands of these conversations and lots of time spent in this market, what we think is that really everything in marketing comes down to solving one of four problems, which is how do I get more leads into my pipeline? So how do I attract more leads? How do I engage those people once they're in my pipeline? So what do I do with them to convert them into ops and customers? How do I measure what's working? So how do I know when I'm being successful, what's working for me, what's not working for me, so I can make better business decisions? And how do I operationalize my business processes? In other words, how do I integrate my data, across my systems so that I have accurate data at the time I need it for whoever needs it for whatever business process needs it. And so really, in that sense, marketing is kind of simple. If you do these four things really well, you'll probably have a successful marketing team. If you don't do these four things well, you'll probably struggle. Companies that, we see in the top 10% are the ones that are executing at an A level across all four of these things. Companies that we see in the B, range in the next, 50th percentile up are the ones that are executing at a B level across a couple of these things. And everybody that's in the bottom are the ones that are failing at one or more of these things. MarTech as a category, as a result, has become really, really important for marketers because marketers need the right technology to power all of these parts of their business. And so we've seen this explosion occur. In 2011, when I was just starting my career, I started off as a software engineer, by the way, so that's the side of the business I come from. But when I was just starting my career, there were 150 MarTech companies in the world. I was running one of them at the time, which was a social media analytics company. But there was MailChimp, there were a handful of others, but it was a relatively small field. Today, there are over 13,000 of these MarTech companies out there. So the number of companies has really exploded, and it's grown over 7,000%, and this is something like a 35% CAGR over this time period. So it is quite a large increase that's occurred. And the reason for that is because marketers have, there's been more and more solutions that solve niche problems, that solve problems in unique ways. And so the average, marketer today has become very dependent on this technology. Average enterprise uses 120 different marketing tools from for their day-to-day, running their business. So what that means from their standpoint is they've got data living in a bunch of different systems. They've got customer experiences that are happening in a bunch of different systems. And this is just messy for their customer journey, for their customer life cycle, and for them to figure out what the hell's going on, and actually make all this data and all these tools work. What we've seen in terms of when we went and looked at this data, around what's going on with the market, what we found is customers are really frustrated by the amount of data problems that are being created for them because of these explosion of tools. And so, and this frustration is increasing, not decreasing. So it's going the wrong direction. And, if you think about the rate at which that line is growing in terms of number of MarTech tools, it's directly correlated with this. As the number of tools goes up, the frustration goes up. So from 2020 to 22, we saw a 5% increase in the number of marketers that were saying that unified customer data is a major barrier to their success. That's 70% of marketers now, so over 2/3 are saying that if these were dentists recommending a toothbrush, you would buy that toothbrush, right? 7 out of 10 marketers agree that this is a big problem. Same time, 50% of marketers are now saying that data centralization, so in other words, how do all these tools work together, and how does the data move between them, is their number one most important factor when they pick a new solution. So do these tools work together smoothly is more important than what other features or functionality they have, or anything else. And so we think that's extremely important, and we don't see this trend reversing. We see it getting worse, but we also see it kind of creating an opportunity. So what we're doing at Banzai is basically building a platform of data solutions or data-driven solutions for marketers that make it easy for them to integrate tools together, so they have the right data in the right place at the right time, all the time, and so that they can use that data to do all those things we talked about: operationalize their business processes, measure what's working, get more leads into their pipeline, drive more conversion. And that's really the key for marketers, is creating a platform where it's easy for all this data to move around, without doing a huge integration project every single time you want to implement a new tool. So in terms of the market opportunity, first of all, MarTech is a really attractive business. It's widely outperformed the S&P 500 as a category. So over the last 5-6 years, the reason for that is MarTech businesses make great businesses over time. They're tend to be sticky. They tend to be essential tools that are hard to unplug. They tend to be tools that when businesses grow, they need to increase their investment in those tools. So, overall, MarTech is a really attractive category, we think. There's a lot of headwinds right now that are in the MarTech space, but are also just general headwinds in the private market, because the vast majority of MarTech companies are privately held companies right now. So in a way, what we're building with Banzai is kind of an opportunity to get, for small investors to get exposure into this market, in the early stages, where they can ride it up, and can kind of take advantage of that growth. But in the private markets, what you're seeing is, one, deal values have come down by like 85% from their peak, or not, deal count has come down. Deal value has come down by 60+% from the peak. And what that means is there's fewer deals getting done, and the deals getting done are all really, really big deals. So you're talking about Series D, Series E type, private equity fundings, a lot of, some AI type fundings, but a lot of great enterprise SaaS, great businesses that are at a Series B, Series C level are not getting funded right now. And that's just the way it is. As a result, a lot of companies are feeling pressure, and you see that show up in the layoffs that have happened over the last few years. You see it show up in some of the growth challenges some of these companies have had. And so, we think there's a lot of pressure right now in the private market that creates an opportunity for us. Essentially, there's a lot of growth in MarTech companies, but M&A is down 50% from the peak. It's at a 15-year low right now. So so we're seeing companies that are unable to get funded in the private market under more pressure than ever to get into to find a home because they may not be able to make it on their own. And at the same time, you're seeing M&A is at its lowest point in recent history. So basically, you got this market imbalance. There's a lot of MarTech companies out there that need to find a home. They're feeling the pressure to figure out what to do. Do I raise? I can't really raise more capital. I need to probably, maybe I've already laid off a lot of my team. I need to, find a place for this business to live for the long run. I need to find an exit for it. But buyers are at a 10-year, 15-year low. So it's a tough position for a lot of companies. At the same time, if you're on that small scale, like I talked about, you're a Series D, Series E company. Maybe you're going public. Reddit just went public. A few companies have gone public, but if you're a Series B, Series C company, you're really having a challenge. There's a handful of private equity firms that are doing deals like that, but the majority of private equity firms have gotten so huge, their funds have gotten so big that they really have to do $5-10 billion deals, and they're not doing a lot of add-ons right now. Same thing with the strategics, because these companies have performed so well. Like I said, there's not many public companies that are out there that are small. A lot of them have gotten quite big and in the MarTech space. And so as a result, company like Banzai really is in a unique position where we can be a strategic acquirer, so we can get all the advantages in terms of synergies and our ability to run and operate businesses and improve their operations and customer cross sell and everything else. But we can focus on smaller type deals because we're a smaller company, so we can be just a lot more agile and a lot more nimble in terms of the opportunities that we look at to make acquisitions. We can look at deals that are doing $1 million in revenue or doing $5 million a year in revenue. Salesforce doesn't want to look at that deal because it's not going to make a difference for Salesforce. HubSpot doesn't want to look at that deal. They need businesses that are doing 100 or 200 million in revenue to move the needle for them or more. So we're really in a unique position. And again, in terms of what we think we're providing to the market, we really think we're providing the public market, the small, investor, retail investor, with an opportunity to basically get in to this private market opportunity where there's a huge multiple arbitrage potential here, and where they can maybe get access to a bundle of these smaller but really interesting, really dynamic businesses that they wouldn't be able to get access to normally as private businesses. We also think this market is fantastic overall. I think anytime you're going to look at building a business that's based on a multi-product strategy, you really want to know where the market's going in the long run. So today our serviceable addressable market's over $5 billion, and we see the long-term market growing at a 12% CAGR roughly. We partnered with Winterberry Group to put together a study related to this, and we think they're the kind of the top firm in this space in terms of marketing technology analysis, and we think they understand the market better than anyone, and frankly we think this is a really attractive market to be in because we think the market's just going to continue growing over time. So talk a little bit about how Banzai is approaching this as a company, because basically huge opportunity out there. So what are we doing to address it? First of all, Banzai, we're building, like I said, building a platform of these mission critical MarTech solutions that are data-driven solutions. And then we're focusing operationally on building our secret sauce in terms of customer expansion through cross sales. So very, very strong operational focus on customer expansion. We like to say more beer in bigger bottles, and and uh, and with a focus on data-driven MarTech products, meaning that when we're talking to a buyer, we're probably talking to the same department to buy every product that we sell, which means we have a bigger cross-sell opportunity over time. So we're going out there and looking at what can we build and what can we buy, strategically consolidate in this space to get the multiple arbitrage, to take companies that are private businesses and bring them onto our platform, and give investors access to that opportunity. So just walk through what we look at. Prior to starting Banzai, I was a general manager at a business called Avalara. Became one of the 25 largest software companies in the world, went public itself, and did really well for investors. And one of the things that I helped work on there was how do we integrate some acquisitions that we made? Because when I came on, we just acquired a business that I got put in charge of when I was 24 years old, and we didn't really have a playbook for how to do acquisition integration, and we had to build that and figure that out. And so we've looked at a lot of these lessons that we've learned over time, over a number of years of doing these type of deals. And so I'll say what we look at is four categories overall. So we look at how's the business doing financially. In other words, what's the rule of 40 for it? How's it growing? Is it profitable? All that. We look at the strategic fit. Will our customers buy this product? Maybe they're buying a certain kind of data-driven product from us today. Do they want another related product? What are the related products they care about? We're looking at customer metrics, so we want to look one level below the income statement and look at how are the customers ultimately are what drive the revenue and the earnings of the business. So is the customer base growing? Is it churning? What's the net dollar retention for that customer base? All that. And then ultimately we look at, are there any other synergistic factors, right? Can we integrate product? Can we integrate this product into our existing product stack in a way that makes it more attractive or makes it easier for us to acquire customers at a lower cost? Are there other cost efficiencies? In other words, do we have two accounting teams and we only need one? Or, do we have two support teams and we only need one? Things like that we can do to make the business a little more profitable. So that's what we look at when we're evaluating, a business that we want to potentially consolidate. And I would say once we own a business, so let's say either we acquired a business, which we've acquired a couple, or we start a business, we're going to measure every business unit, which we've also started a couple of business units. We're going to measure every business unit based on a kind of different playbook, a long-term success playbook. And that's based on, again, rule of 40. So how are we growing? How's our operating EBITDA looking? We want to see that the sum of those two numbers at 40 or above, ideally. We look at what's the actual performance versus the forecast. So we're trying to run a pretty tight budgeting process and look at essentially what we think of as a hurdle rate for this business. What's the cost of capital? What's the investment return that we want to see on that in terms of growth? And then we look at customer expansion. So can we drive up the unit economics? In other words, bring the gross margins up. Can we bring the churn down? Can we improve customer base through cross sales? And then we look at things like just standard SaaS metrics, like what's our LTV to CAC ratio? We'd like to keep that above 3, but ideally above 5. We look at our customer satisfaction. We look at NPS. Obviously, we want customers to be happy with the products. Our goal is to have the #1 rated product in any category we're in. We may not be the biggest, but we think if we can be the best, that over time, that creates a strategic advantage for us to continue to grow on. And then, relative to plan, we want to see what's the impact to that business unit on the combined, entity. What's its contribution in terms of EBITDA? What's its contribution in terms of revenue? And how's it pacing versus the entity overall? Like I mentioned earlier, I kind of touched on this, but I really want to just really dive into this for a second because I think it's so important to our strategy. Is our secret sauce here really centers around customer expansion. So, driving organic growth, again, more beers, but then driving bigger bottles as we add additional products on. So, bringing more customers on, that's one thing. When we do a strategic acquisition or consolidation, we're basically bringing on more customers and an additional product that we can sell. And that allows us to then, fulfill the third turn of this flywheel, which is the cross-selling part of it. And that's really essential to us because if we can, drive growth through cross sales, that drives stickiness, it increases ACV, and it increases net dollar retention, which is, essentially the most important, most essential part of a SaaS business. So this flywheel for us is really critical, and I think it's one of the things that makes our strategy different from a lot of other companies out there. And I think why we'll if we can execute on this well, I think we'll be able to deliver superior returns for our investors over time. I'll just say we build a lot of products that are data driven products. We also have a data driven strategy. So we're very focused when we're looking at expansion on how can we tell if somebody's going to be a good prospective customer for this within our existing customer base. This allows us to bring our customer acquisition costs down, right? But our CAC, relative to revenue growth. So, we're looking at things like what markets are they in, what industries are they in, how engaged is this customer, are there customer leads that we can generate? And so we run a lot of customer marketing in addition to customer success investment to try to drive more expansion. Ultimately, the sum of that is net revenue retention, and that's our number one corporate priority, our number one corporate goal. This is different than a lot of companies. A lot of companies would tell you, oh, driving revenue, revenue growth is our top priority, or EBITDA is our top priority. Those are absolutely essential. In our view, those are outcomes of a successful net dollar retention improvement strategy. If you get NRR right and you continue to improve NRR, your business will get better over time. It'll grow faster and it'll be more profitable over time. So that's why we think this is such an important focus for us. And we think this is really enabled by that flywheel strategy. And it's really enabled by the strategic consolidation strategy. If we can get 10 or 20 products on our roster that we can be cross-selling to our customers at all times, that's going to create an enormous impact on net revenue retention for us. And it's going to be a huge catalyst for growth in the long run. And so that's one of the things that our investors are basically betting on, is that we're going to be able to execute on that over a period of time. It's not going to be overnight that we're going to have 10 or 20 products, but over a period of time that we can deliver on either building or making good acquisitions in that space, that we can have some really attractive products for our customers that give us upsell and expansion opportunities that drive this number up. And there's a lot of other things we do to improve this as well, going further up market, focusing on larger accounts, investing more in customer success, getting pricing right, a lot of things that go into it. You can see the whole universe of things that go into this, but this is an important priority for us. So when we think about our business, this is kind of a picture. We think that at the core of all of these things is basically data, and that's what Banzai is about, is providing the data to power, or the data-driven experiences to power all of these aspects of the marketing funnel for marketers. And so some of these things we want to, ourselves provide the data for, or provide a data-driven platform. Some things it's about data integration. So it's about having really great integrations with HubSpot, with Salesforce, with Stripe, so that we can enable our customers basically the data tools that they're buying from us are going to work really, really well with the tools that they already have. We're not going to go replace HubSpot, but HubSpot's a customer of ours. So we want to integrate really well with them. We want to have a great partnership with them. So today we have 3 products, and I'll just briefly touch on these. Demio is a webinar platform that we like to think of as a data-driven webinar platform. That's the advantage for marketers. Demio lets you capture every piece of data about who's attending, when they're attending, what their focus is, gives you an engagement score for each person that shows up for your webinar. So your sales team can prioritize around that. Lets you capture information like, who clicked on this, who downloaded this handout that I put, or who clicked on this call to action that I put in here, that enables your sales team or your marketing team to appropriately follow up on those things. And it also lets you just collect primary data through things like polls or surveys that you can build in there, through things like Q&A that you can build in there. And we're also working on a lot of AI features for this. We were the first company in the webinar space to roll out an AI moderator, which means if you have an on-demand piece of content, like a pre-recorded webinar, you can deploy that embedded on your website. And through Demio, you can train a chat bot to interact, talk about your business, answer questions. So this is a really, really cool capability for marketers, because it takes that type of flat, just video replay experience and turns it into a really cool dynamic experience that's interactive for customers. And you can run it 24/7 without a human having to be there. So, we think that's really neat. And we're building all kinds of new AI features that leverage this data in really interesting ways for analytics purposes and other things. Boost, this is a product that we launched about a year ago. Boost is a social sharing product. And again, going back to integration and being data driven, the biggest challenge for marketers, is, at least when they're running events, is how do I get the right butts and seats there? And so Boost makes it easy for you to take any piece of content, but especially an event or something, and share that, get your audience to share that and promote it for you. And one thing that's really cool about Boost is it's pre-integrated with Demio. So if you already use Demio, you can click on a link in Demio, take you to Boost, and all your events are already going to be in there. So you don't have to do any additional integration work, no data migration, nothing like that. It's just going to be right there for you. Reach is an incredibly cool product. This was our earliest product. And the purpose of Reach is really just to get butts and seats for events. But this is a data-driven product, and all of these products are. But the way that this is a data-driven product is through our audience AI feature that allows you to specify. You can kind of see it here in the top right corner. You put in the details about exactly who you want to target for your event. You might say, I'm doing a road show with, for a new security product that I'm running, and through Reach, you can target, the people that are the right people to show up to your event with the right message at the right time, and that you're going to get clean, reliable data from Reach based on, where in the world these people live, what their job title is, who's responsible for what. And Reach has a big data engine that goes out and essentially pulls data from a bunch of different sources, including some that we have unique access to, and makes that available to our customers. And so that's a really interesting and differentiated solution, and super valuable. And by the way, we've just made a big investment in this, and we have a new version of Reach 2.0 that we're going to be announcing really soon, and we're really excited about that. It's going to be a huge announcement for our customers. We're really good at building products. We win a lot of awards. These haven't even been updated in the last couple months, but we've won a lot more awards since these came out. Basically, customers love our products. We're consistently rated as a leader, a high performer across the board. And customers love us. We have thousands of customers ranging from small businesses to the Fortune 500. And we have a bunch of even big logos that aren't represented here. So we've had a lot of success over time just building that customer base, especially building up our enterprise customer base. Just a little bit of background on the team. Like I said, prior to starting Banzai, I was an executive on the team at Avalara. Mark Musburger also was there. Simon Baumer, who's our CTO, headed up engineering at Verivox, which is a big e-commerce company based in Europe that had a very similar model to us, obviously focused in a different niche. So I would say a lot of us have had experience executing on this type of playbook before, the strategic consolidation playbook. and doing it successfully and building successful businesses out of it. Ashley Levesque and Rachel Stanley, also key executives on our team. Ashley heads up marketing, which for us means, again, the kitchen sink, IR, PR, corporate marketing, branding, all kinds of things like that. And Rachel is really the one that's responsible for that key strategy of cross sale for us, so driving that customer flywheel. And she's been a phenomenal executor, and we're very lucky to have both of them on the team as well. And in terms of our track record of doing this strategic consolidation, the team here has done over a dozen deals, close to 20 deals, I think, in the last decade. Some here at Banzai, some at other companies, but we've had a lot of experience doing this and doing it well. Probably the biggest single risk factor when you're running a strategy like this is it's easy to make bad bets, and it's easy to screw them up once you close on them. And so we think having a team with this level of experience is really important for us. That's really it. I won't bother giving you the summary here, but really grateful for your time today, Kyle. And again, if any of the viewers here want to go to ir.banzai.io and look at this presentation, they can download it themselves, and they can read everything. And of course, they can reach out to me on Twitter or anywhere else if they have questions about it.
On that note, I'll pass it off to the viewers as well. We'd love to know what you think in that comment section below, and consider subscribing, because as news and catalysts continue to hit the wire, of course, we'll bring it to you here. But on that note, we look forward to catching you in the next one.